Okay, and we're live. How's it going, everyone? Welcome to By the Horns. I'm your host, Ricky Allardyce, with my colleague, Brandon Fanikak, as always, and today with our esteemed guest, Russ Lamberti. Welcome, Russ. Russ is a formerly trained economist from UCT. More recently, delved into the Austrian school. He runs a firm called, you have to correct me on this.
That's right.
ETM Macro Advisors. My bad. Sorry. ETM Macro Advisors. Russ, welcome to the show.
Great to be here, Ricky. And just read your notes, dude. you got them down, yeah. But no, it's great to be with you guys, man, and looking forward to a good chat. Very privileged to be here. Thank you.
Brilliant. Thank you.
Do you want to give an intro of what you do, how you got there?
Yeah, so I'm a professional macro analyst. I mainly advise professional investors, fund managers, institutional investors, a couple of high net worth clients, hedge funds, some venture capital guys, and really just on big sort of macro asset allocation decisions. So how are major asset classes, responding to macro conditions? What's going on with business cycles? How to navigate big sort of structural, secular trends, but also kind of business and credit cycle trends, and sort of structuring portfolios from a macro perspective. So it's not the be all and end all of asset allocation. There's lots of dimensions to asset allocation. One of those dimensions is macro, and that's where I play. Yeah.
Okay. Russ, obviously we got you on the show to chat about the macro perspective because this is your field. But in brief, if you could give us like a quick summary of what's the global macro picture in 2021.
Wow. I mean, it's sort of macroeconomics through the looking glass at the moment. It's a very, very strange world that we're living in. Things, the goalposts have shifted so much in the last 20 years. So the big picture, of course, is that we've come out of this crazy lockdown situation. Well, we're not really even out of it yet. So we had this huge shock to supply last year because of enforced shutdowns across the globe. And the response to that from governments has been nothing short of astronomical. So we've seen enormous deficit spending, huge money printing. US money supply growth, to give context, is probably up by a third in 1 year, right? So you just added an extra dollar out of every three or so to the money supply that existed, that were ever created in the previous 200 years. So big money supply growth in the US, really big money supply growth everywhere. So we're seeing huge monetary injections. Those are all done differently depending on the central banking system and the banking structure, right? So Fed style quantitative easing is generally way more aggressive. It generally creates money, injects it directly into the economic system, so that money supply actually does grow. There's a meme out there, there's a sort of common wisdom supposedly out there that says, the money gets trapped in the banking system. That doesn't happen with Fed QE. That would more be a feature actually of South African QE. So we did a bit of QE last year. The SARB is engaged in that sort of thing. And that's more a feature of South African QE. It's a little bit more a feature of Japanese QE. So this thing can look different depending on the sort of plumbing and the technical structure of how you do these things. But basically what we started seeing last year was the Fed not just printing a lot of money, but really injecting it kind of directly into fiscal projects. So what you've got is the Treasury now spending a lot of money, sending checks in the mail to people. And the Fed is basically printing that money for them. And the only way that doesn't look completely sort of obvious to people as just being, a ridiculous situation where you're just printing money and giving it to people is that in between those transactions, they've created these kind of special purpose vehicles to almost just sort of funnel the money through and create a bit of a respectable front to what what economists call quasi-fiscal monetary policy, which is what Zimbabwe did. And it's what every central bank does, that ultimately, if you go down the hyperinflation route, you have a full merging of the treasury and the central bank. Right? So you just print the money that the government needs. And you can do that in all sorts of ways. In Zimbabwe, it got down to literal suitcases of money in boots of cars, like in the central bank's basement, that they would then give to forex dealers in physical lumps of cash, to go and trade for dollars on the street. Obviously, in a modern context, this is all, and certainly in a US context, that's all just going to take place in the electronic and in the digital realm. It's going to take place in the banking system. It's going to take place electronically by and large. It's not going to, it's probably not going to become, even if it got to this stage, probably wouldn't become wheelbarrows of cash. If we had very high inflation in the US, it's going to probably still likely remain, at least for quite some time, very electronic, particularly given that they're now talking about central bank digital currencies, which means that the whole plane of monetary existence is really moving more and more into that realm. So
before we go down to digital central bank digital currencies, so it's essentially the central banks buying treasuries from the treasury. Right? And are you seeing any demand for those treasuries from China or any other countries,
or Russia,
like you did in the past?
No. So treasury holdings are falling. Central banks are just becoming the main sort of marginal buyer of these things, right? It's almost getting to the point where the central banks are buying so many bonds that there's almost not enough new bonds to sort of satisfy what the central bank's willing to print and do.
Yeah.
But are they, are they buying their own bonds, or they're buying other countries' bonds too?
So it depends. So let me just finish that point. So what you're actually getting to now is, so what we had in 2008, we had a big financial crisis that hit, and government decided it had to bail everyone out. So it leverages up the federal government balance sheet, right? And in order to kind of basically afford that and stop bond yields spiraling out of control, rising too high, the central bank then comes in. Obviously, the central bank is also playing a role in bailing out the banks, liquefying the financial system. But what you had there was basically fiscal policy, a big fiscal deficit, and then the Fed sort of comes in and just laps up a lot of those bonds. Now what we're seeing is the central bank has such a desire to print money that they're almost, this becomes a feedback loop, but they're almost now spurring on the government to borrow more. So we've just seen today Biden announcing potentially a $6 trillion, fiscal deficit program, which is something like 25% of GDP.
Yeah, and he referred to it as like for capital projects, right?
Yeah, well, it's supposed infrastructure spend,
yes.
right?
It's like FDR did, right? It's the same.
Well, yeah, it's like so you build roads. Some of them are worthwhile. Some of them are roads to nowhere. Some of them are these like big boondoggle infrastructure projects that and infrastructure is this big myth, right? You got to build infrastructure and then like growth happens. And the historical record on this is you build infrastructure and then it's got to be maintained. It doesn't pay itself back. It's usually poorly allocated capital. China's a good example of this.
Yeah.
So, but the point is that you've got the printing sort of almost driving the fiscal now, and then it loops back to necessitate the printing, because as you blow up the national debt, you've got to kind of keep absorbing all these bonds. And so and one thing we talk about in our book on hyperinflation in Zimbabwe, which we can get into a bit later, but we sort of allude to the fact that like when countries get into this mode, it's very difficult to get out of it, right? Yeah. And you can see how fiscal deficits drive printing, the huge printing desire to create currency, to flood the system with money, to prop up demand, to stop deflation pressures and so on, itself actually drives fiscal policy. So you've literally got a situation now where the Fed is so hungry for bonds that the federal government is like, okay, well then we'll create some more. We'll just spend some more. And I mean, this is why we are seeing inflation just about everywhere you look.
Yeah.
So there's this whole debate, like, is it inflation? Is it transitory? Is it permanent? Like, what's going on? I mean, you can get into these debates, but like, just look with your eyes.
Yeah.
Things are going up. Things are going up in price. So we've had this huge supply shock in the world. That's not fixing itself quickly, right? A, we've got lingering COVID restrictions and fears. B, when you smash supply networks like that, you don't just click your fingers and they start up again. Anyone who's done who understands business knows that to restart any kind of production endeavor requires capital, and so it costs money to produce stuff. You don't just click your fingers and you got widgets on the shelves. So I think the big thing now is we're actually in a capital crisis, and so we've actually got a shortage of capital. We're consuming capital, and when you print money, when you drop rates low, you get these big consumption binge cycles. Everyone's trying to get their hands on goods. US retail sales are absolutely flying at the moment. So you've got this kind of real inflation pressure. And just to say, if you look at, where are we seeing inflation? It's stocks.
Yeah.
It's
real estate.
It's real estate. It's commodities.
It's lumber.
And
oil.
And the broader agri commodity space is very, very strong. Real estate is a huge one. And then of course, cryptos, Bitcoin, all kinds of cryptocurrencies, rubbish like altcoins. Everything's kind of been going for it. Yes, there's been this like pullback, but we're in the throes of lots of people starting to realize that the powers that be are taking the reserve currency, the dollar, off which every other fiat currency derives.
Yes.
We must be very clear about that. Even something like the euro, effectively derives from the dollar still. And they are debasing it. They are saying this currency is not hard to get hold of. We're just going to create trillions of the stuff. That's going to lead to inflation. And
they've got intellectuals providing cover for them via MMT, right?
Yeah, in spades. So you don't even need the MMT guys really to provide this cover. So a guy like Paul Krugman, who's like an arch Keynesian,
yes,
he would say, oh no, the MMT guys are like just a little bit, they're
heretics.
They're going over the edge. They're in the deep end. But he's basically, he would condone everything we've seen up till now.
Yeah.
And because he's so like ideological, if Trump was still in power, he would probably be criticizing it a little bit. But basically, with the Dems in power, he would be saying there's no real inflation threats. CPI is 2.5-3%. That's what's the problem?
Yeah.
And
there's no problem with how we measure CPI. That's totally above board.
Yeah, exactly. Exactly. So he would be kind of cheerleading this, but further out on the spectrum there, you've got the MMT guys, and to be blunt, the MMT guys, this is like a very flimsy intellectual justification for print money.
Yeah.
So maybe for the viewers and listeners, like explain it, because I heard a good analogy the other day, because it's so many moving parts, but basically it's just a government sees how much was spent, and then they determine the budget from that afterwards, right? Is that modern monetary theory?
Look, what these guys say is that, in a nutshell, what they say, which is no great revelation, right, is that government can spend as much money as it likes because it can print it.
Yeah.
Okay. So they would say, look, there's no tax constraint on government. Why in fact, they would, the radical MMT guys, funnily enough, are basically saying scrap tax.
Yeah.
That they would say, stop all this tax nonsense. You got to tax people, and you got to spend it back, and you got to pretend you're getting into deficit trouble and all this sort of stuff. Just don't tax anyone.
Is it the people on the left?
Yeah, well, these would be like the sort of committed, pure MMTers, right? They would basically say, look, there's no need to tax people because you just print it, and then you spend it, and they would acknowledge they would be like, that creates inflation, and that's how you are getting the value in the money you print, right? Every new dollar you print steals an incremental bit of value from every existing dollar out there. So they would admit that. They would say, yeah, the government prints the money, and that's your effective tax on everyone, which is just like inflation tax. And then the government just spends it, and
the music never stops.
And what's the problem, And so like I always joke that MMT is basically the theory that if government is really committed enough, it will just be the last entity to go broke, in the system, right? Yes. So it'll just print and print and print, and what that does, of course, is it sucks control of resources to the state. So MMT is socialism through the back door, big time, right? This just makes the government the nexus of economic decision making and control.
Is it not the logical conclusion of central banking? Is MMT not logically where it goes?
Well, I think it's the logical conclusion of politics, which is and a central bank is sort of a logical means that political power uses, right? So I think, is it possible to have a disciplined political system with a fiat central bank fractional reserve banking system where you have, say, constitutional rules on deficit spending, not allowed to run deficits, you constrain your central bank in various ways? Could that system sustain itself for 100, 200, 300 years? I think it could, but the nature, what history really bears out is that the nature of man is such that when there's a money tree, he wants to go and harvest it, right? And so central banks have this irresistible. Central banks are just organs of state. So this idea of an independent central bank, obviously nonsense. So central banks are organs of state, and states are addicted to monetary control. First and foremost, of course, for their own ends, consolidating power, waging statecraft. So the dollar and various currencies are used in sort of international relations, international statecraft. Obviously, how you can control resources domestically, and then how you can keep constituencies happy, right? So these guys are unhappy. We're going to create currency through various mechanisms. This becomes the politically irresistible thing, and this is why, for example, gold came to be regarded as sound money, because yes, you could control it, you could manipulate it, you could debase the coinage, but in the final analysis, there was only so much gold that you could find, right? You could only mine so much gold. Occasionally there would be these big gold inflows when they went to South, and when the Spanish went to South America and found huge amounts of silver and gold, and these things would flood back to Europe. You'd have these inflation cycles, but basically you had a check on this political pathology, right? Because the thing that was your money was physically scarce. It had what we know as today as a high stock to flow ratio. You had a ton of the stuff above ground, and you could only mine incrementally a tiny bit of it. So you couldn't just print gold, and debasing the coinage back in the day meant confiscating all the coinage or calling it in, melting it down, throwing some alloy in. But that was a very obvious fraud, right? People would get their coinage back, they would weigh it, they would assay it, and they'd be like, these guys are defrauding us, and the inflation would set in. So of course, the march of political history has been, as we've sort of in many ways improved money and banking technology, we've also, politicians have found more efficient ways of debasing the currency, to the point now where central bank digital currencies, I don't have the brain power to think of what the next stage would be after that, but certainly digital currencies, central bank digital currencies, is the perfection of inflation. If you think about it, right? It's like you're all locked into a cashless banking system. We'll institute negative interest rates on your bank account, which is effectively a tax. We can create this stuff exactly how we want, when we want it. We just press the computer numbers, done, Control P, done. And we can target it in all sorts of political ways. So we'll send it to that constituency, and we can track your spending. We can track what you spend on. We'll link that to a social credit score.
and they can stop at any time.
You can take it away from people.
What you're seeing in China and then the UK are really looking at is the expiry of these currencies.
Yeah.
So that forces consumption, right?
Which isn't a new idea, but it's finding revival again. So there's always been this idea in, let's just say, bad economics that spending is the thing. You got to spend, right? Like when you spend, that's economics. That's the economy working when people are like spending. And then when people don't spend, this is now a bad thing. When you kind of
hoarding.
When you save your money, there's this sort of ridiculous caricature that saving is hoarding. Like your money's literally under your mattress, and you're this greedy guy. Which, like, if that's where you wanted to keep your money, that's also fine.
You're right, yeah.
But of course, real savings are the only thing that creates economic growth, right? You save. If we consumed everything we produced, we'd literally have nothing. We'd be paupers. You reinvest. You maintain your house. You save, and you use the kind of capital that you accumulate to build wealth. So there's long been this thing like, if we could have a money that decays, that you have to spend it like a hot potato. There's talk of them introducing these kinds of rules into certain digital currencies, which is, I mean, it almost couldn't be more anti-Bitcoin, right? It couldn't be more opposite. Like,
it's antithesis.
Like you've got a fixed supply, distributed cryptocurrency on a distributed ledger, secured by the community, and the idea there is that you work, you stack sats, you save your work time, and the idea is really like, I mean, obviously currently we're in this insane adoption phase, and it might last for another decade, maybe even more. But obviously, eventually, the idea is that basically, you don't have to be fancy with your saving and investing. You've worked, you save it in a stable, sound currency, and when you retire, you get that value back. You don't even need to like compound that value in huge ways. If you want to compound it, you need to take some risk. You need to go and invest and lend and do all that stuff. But if you just want to, live off what, or retire off what you've saved, you should be able to get like for like value at least. And in a growing, progressing economy, you actually should get more value.
Because there's deflation in prices.
The decaying currency like this. So the idea, I mean, just for the viewer or the listener, like the idea is that you get a currency, you get money, and it could be a time. It could be a time decay. So it could be like you've got 3 months to spend this money, or you've got 6, or you've got a year to spend this money, and then it becomes worth nothing. Or it could just decay gradually through time. So if you hold on to it, a year later, it's worth 90% of what it was a year ago, and then.
But that's kind of the sense that we have now, right? So I suppose it's more honest putting a timer, like time limit.
So this becomes the perfection of state. Monetary power. What I find interesting about this is there's a lot of people saying, Bitcoin and DeFi and what have you, and we talk about all that stuff. But like Bitcoin is obviously in trouble now because central bank digital currencies are coming. Now, I can understand the one aspect of this argument, which is like, as they institute central bank digital currencies, that comes with a whole regulatory apparatus that tries to totally lock Bitcoin out. Right? It sidelines it, it bans us from using it. It can do all sorts of kind of nasty and difficult things that make adoption use just that much more difficult at the margin. Of course, we know that the community is going to respond to that in like very novel ways, but it for the marginal adopter who's not tech savvy, who doesn't want to break the law, who's just kind of wading and dipping their toe in, that's a deterrent, right? So I think that is a valid point, but some guys make the point that like once they go central bank digital currency, then it just destroys the value proposition of Bitcoin. And I mean, that couldn't be more wrong, right?
The people making those arguments are journalists.
You're now moving.
That's why they're wrong.
Bitcoin exists because we have a terrible fiat system, and B, because the internet was going to create a native currency at some point. Right? So this is native internet money. I mean, that's the bottom line. But so that's why it exists. But of course, it can exist in a world of, say, a very sound and stable dollar. And if that were the case, Bitcoin's price, who knows, maybe it's only $1,000 right now, or, whatever it is.
Its utility is much lower than what
it's much lower. So it's benefiting from the fact that you've got rank mismanagement of Venezuela, rank mismanagement of Zimbabwe, rank mismanagement of South Africa, the US monetary system, all this stuff. And so it catches this huge bid. Now you move to central bank digital currencies. What you're doing is you are escalating monetary tyranny, right? You're making it way more attractive to own Bitcoin.
Yes.
So at the same time that you're making it way more attractive to own Bitcoin, you're instituting these digital currencies, which may then come with more onerous restrictions on the Bitcoin economy. And my feeling is that the combination of more restrictions on the sort of legitimate Bitcoin economy with a greater desire to own Bitcoin just has to pump the price even higher, right? Because Bitcoin's just become harder to get hold of.
Yeah.
The premium on holding this immutable, perfectly scarce asset just has to go up in that world. Now that's going to be a super bumpy ride.
Yeah.
Bitcoin is not, au fait with 80% drawdowns. We're in like a 50% drawdown this cycle already,
because
nothing can run. So this is going to be a bumpy road, but central bank digital currencies for me are part of the bull case.
Yes, absolutely.
I mean, I think they definitely will evolve, because obviously they need to, because they don't have interest rates to play with anymore, and they're going to have to evolve the tools that they have. And I also feel, I don't know whether it'll be this round or maybe 2024 cycle, that's where the nation states really start coming for Bitcoin. Who knows?
In terms of their adoption.
Yeah.
No, I don't know if they're going to fight, because look at America, right? They fought the petrodollar, they took down Hussein, they tried to take down, a failed coup in Venezuela, and there's countless others we don't know.
Took down Gaddafi, yeah.
But that's what Bitcoin's threat is going to be eventually, and I don't know what the hell they're going to do.
Look, we don't know what they're going to do, but I would set out a few sort of principles on this. So when you're dealing in the realm of statecraft and money, then that's the realm that states understand. Okay, so when Gaddafi says, we want to kind of have a gold-backed dinar and various other things, or Saddam Hussein says we want to trade oil in euros, or whatever you're looking at, that's in the realm of statecraft. So you go and topple that dictator, you impose sanctions on Iran, you block Russian oligarch bank accounts, and you play with the SWIFT payment system. You can kind of do all that stuff. I think what guys have a blind spot to in this monetary revolution, let's say, is that it's a bottom up revolution. Right, so every monetary transition that we've seen, major one, certainly in sort of the last couple hundred years, let's say, has been handing the baton from one state over to the next. So it would be obviously gold formed the basis of a lot of the monetary system, but it was the custodian of that whole system was the Bank of England and the United Kingdom and sort of its dominant global empire. That hands over to the US. You've had, I suppose, various handovers throughout the few hundred years. The Spanish were kind of very dominant at one point, the French at one point. And then, of course, what you have now is you have this sort of cat and mouse game of monetary statecraft going on, which is essentially a game of like, how much can we print? And the world doesn't discount our currency.
Yeah.
Because then you can actually acquire real resources, right?
Yes.
So you can create currency. If you can do it in such a way that the world still wants to hold your currency, then you're literally printing wealth. You're printing money and buying resources from people. And there's
at no cost to yourself, but you're acquiring real value from them.
Correct. And it's one of the reasons why emerging markets, the best thing emerging markets could do with all this that's going on is allow their currencies to appreciate. Like if they were sensible, they would say, hang on a minute, America's just going crazy here. And we're just selling them stuff for these dollars that they're just printing up. Like, so we should actually be letting the rand go to 10, 8, 7. Over time, you can an emerging market economy can adjust to that. the Keynesians will be screaming at the screen right now, going, "How could you possibly let that happen? You're going to destroy your."
They're not watching us, so it's okay.
But that's the way it should go. So anyway, you got this monetary statecraft. Now, I just want the key point here, and I keep thinking about this when I hear people saying things like they're not going to let it happen. They're not going to let the man on the street have monetary autonomy, let's say, in this Bitcoin, crypto, DeFi sort of world, right? And I think that misunderstands the nature of the threat to the state. So when states are dealing with other states, it's like that's exactly where they want to be, because I can see you, and I can put sanctions on you, I can attack you, I can leverage soft and hard power against you.
Yeah, there's rules of engagement. That are well known,
and very and pretty clearly understood power dynamics. But when you have this bottom up kind of monetary revolution, now we can debate how widespread that is, how much of a revolution it is. But like from my vantage point, everyone below the age of 35 is kind of on the bus. In the modern world at least. Yeah. Now, maybe I'm wrong on that, but let's assume something like that. You've got this massive voting cohort coming through, right? Who's like completely cynical about the fiat system, the state monetary system, the bailouts, all this sort of stuff. So what I'm trying to say is that for perhaps the first time in history, money proper is actually becoming a fulcrum of political legitimacy. Right, it's becoming a fulcrum of state legitimacy. Like if you want to, because bear in mind, what do elites do? What do state and government elites do? They pivot based on popular legitimacy, right?
Yeah.
So they'll try and control an area, but when it becomes an uncontrollable space, they'll back off, because they know that if they try and fight for that too long, they're going to get overthrown, right? They're going to lose their position of influence. So they'll back off, position themselves. So I mean, like we all know right now, I mean, the members of Congress, do they own Bitcoin? Hell yes, they do.
Some do, yeah, for sure.
Well, I reckon more than you think. Right?
Definitely more.
So these guys are getting in on it. They're positioning. You probably got a lot of banks and financial elites now taking positions in small crypto businesses and so on. So this is how it goes. So anyway, my point is like to just say that a billion people or 3 billion people or 5 billion people. No, you can't use the money you want.
Yeah.
Like that's got political consequences. You don't just get to put up the middle finger to a massive constituency that's increasingly energetic, politically engaged, powerful, and all this sort of stuff.
And also for the first time in history, have the ability to route around you.
Yes, it's such a decentralized network. And so I feel like there's not sufficient appreciation of this fact. I don't think there's been any time in history, like we maybe came close to it when FDR confiscated gold in 1930, I think it was 33. We maybe came close to it in the 70s, but I don't think there's ever been, particularly amongst younger people, such a strong consciousness that the money is corrupt. And that there's a way to uncorrupt it.
Yeah.
You know what I mean? And
they're realizing that the money is the heart of the problem.
Yeah. Let's take the Vietnam War just quickly as an example. The Vietnam War was something prosecuted by the state against, other sort of semi-state actors like the North Vietnamese and so on. And you might have said at that point, well, there's nothing anyone can do about this. Like the US government's just going in, it's carpet bombing the forests. It's just, that's what it's doing. And you can't do anything about it. And then what happened? Like it became a huge legitimacy issue, right? The people basically said, no, we're not going to do this anymore. And Nixon eventually has to yield. And what happens? Vietnam becomes a communist country for the next 20 years. Like they just had to let that go, right? So I think that there's an underappreciation of this very critical fact that money is becoming a point of legitimacy for states. Like I don't think that's ever happened to the degree that we're seeing. And to suggest that these guys will now just take away this kind of newfound autonomy from tens of millions, hundreds of millions of young people across certainly the Western world, and increasingly in Asia and just about everywhere else.
And the world over. So you can't contain it just in like one country. It's not just South Africans or Americans. It's like around the whole world simultaneously.
Yeah.
how do they deal with that?
Yeah, they'll probably continue their subtle ways, trying to
Yeah.
control the narrative like they are now with the energy fund.
Yeah.
But I just can't see, because they're just much more, I guess, more ninja-like than me. I'm just trying to see what's their next level after that. What's the next level after trying to control the narrative as they panic more and more? Like, how are they going to be devious?
Well, the mask slips every now and then, right? And like, if the only tool you've got is a hammer, then everything becomes a nail. So at some point, you're going to see an outright attack on Bitcoin. And I mean, that's, I think, a good thing for Bitcoin, because if it doesn't survive that, then what was the point? So it kind of has to go through these phases.
Again, I come back to this thing that if you're going to institute, let's say, a global digital currency, some sort of SDR that's digitized, it's controlled by some federation of central banks. I mean, let's just imagine some crazy scenario where the Fed and the Bank of China and the ECB and all these big blocks kind of get together.
The Davos Bank.
Yeah, create some sort of monetary entente, and they decide, right, we're going to like lock everyone into this hyper surveillance Big Brother kind of financial system. I mean, the degree of sheer tyranny that's unleashed by that. That is a potential future that we face.
Yeah.
Okay. But to pull that off in a world that is so aware of it.
Yeah.
Right. Like everything these guys do, we know about.
Yes.
I mean, okay, there's backroom dealings we don't know about, but basically when they have to play their hand, the internet's all over it. Like, these guys are doing this. We're aware of all this. So
they're telling us to wear 2 masks. We know they're full of shit.
We know they're full of rubbish. Yeah. And you can see how these narratives collapse. I mean, the COVID narrative, the lab leak thing has already done a 180. Yeah. Right. And the masks are doing a 180 already, and all these things are shifting. So yes, these guys are going to be devious. They're gonna ramp up the KYC stuff on all these things. They're gonna make your life a pain in the ass. And so you're gonna have roadblocks along the way. And I guess if you can't handle that as a hodler, if you can't sort of stomach some of that stuff, then maybe you get shaken out. But to me, if you're able to just see the big picture, look beyond it, you're looking to a world where these guys are actually at the mercy of mass popular opinion. Yeah. And as I say, for the first time, mass popular opinion is emerging. I wouldn't say it's there. Certainly across all age groups. There's a generational dynamic to this, but as the sort of 20, 30-year-old cohorts now come through over the next few years, I mean, in 10 years' time, you're going to have 45, 50-year-olds who've been doing crypto for 20 years, right? Yeah. And they are then going to be emerging into positions of leadership, authority. Yeah. Your congressional cohort of boomers currently are going to die off. They're going to retire. They're going to move on. You're going to get new guys coming through. And bottom line is that there are just certain things that governments can't permanently hold on to, right? Governments used to control information. Yeah. Right. Before the internet, governments and big media just controlled the narrative. There was one way to think about Pearl Harbor. There was one way to think about the Iraq War 1.
The border war, right?
The border war. There was a narrative on this stuff, and you had to dig. You had to really scratch around to find the alternative viewpoints. I mean, the internet is this, for its flaws as well. It's this immense kind of truth finding machine. Yeah. It's relentless, right? Yeah. It doesn't stop until it uncovers stuff, and so I just think that with that backdrop. So that's an example where government and big media, and they still don't even know it yet. Yeah, that they've lost the ability to control the narrative, and we've seen that in spades. So information is a good example of a place that they just don't dominate anymore. Yeah, and I think money is as hard as it is for people to believe, and as hard as it is going to be to get there, and as bumpy as this road is going to be. We have a possibility for a future in our lifetimes where states don't actually control money. Yeah, that would be enormous. Yeah. And if that genuinely means monetary competition, there's always going to be bad actors around that space. There's always
Yeah.
going to be nefarious stuff going on. There's always going to be scams and,
Yeah.
all sorts of crazy stuff that goes on around that. But basically, we start to kind of liberate money from the state. And if you see the big picture of this whole thing as the process of liberating money from the state, and that might be a generation, right?
Yeah.
We're 10 years into it. Maybe it's got another 30 years to go. And I'd love it to happen in 3 years, but like maybe it's got another few decades to go, right? And that's this war we're fighting. I mean, if that's the process that we're on, the journey that we're on, where is the Bitcoin price in 10, 20 years time, right?
It's not measured in dollars anymore.
Maybe it's not measured in dollars, but if you measure it in today's dollars, you would say that, if it's going to dominate the space, and if we're going to have a native stateless internet money, like are we or are we not going to have a native stateless internet money, like in 100 years time, right? In what would it be in 2100, right? Are we going to have native digital internet money, or are we not?
Yes.
And we have to have that, right? It's almost impossible to conceive of an online world, of a hyper online world, that doesn't have a native currency.
Yeah. Do you think the aliens are coming here to find out how to make Bitcoin?
Maybe they're coming here to check on their project.
Yeah, maybe that's the one where they're like, wow, we did not see this coming. These guys, we haven't figured this out yet. No, but they wouldn't get here with fiat currency. There's no way as an alien who has all the spaceship on fiat currency.
Yeah, no, they've got super sound money. I mean,
yeah. But I mean, so just get back to the CBDC story, the global CBDC. Currently, we have essentially a monoculture of monetary policy across every single central bank in the world. Basically, they all follow Keynesian economics roughly. It's all the same kind of thesis. Have a central bank, they print the money, they monetize the debt, and that's how the script goes. But what happens when is that falling flat at the moment? Is that the current way of Keynesianism? Are we seeing the end game of Keynesianism now? And if that happens, what happens to every single country that follows the same script, especially the small countries?
Yeah, like people probably want to know, what's going to happen to South African rand? What's going to happen to all our assets?
Yeah. So I mean, I think the observation is basically correct. I mean, every country on earth, barring a few places that adopt other currencies and essentially outsource their money to another central bank. But basically, every country on earth has a central bank. Every country on earth adopts some form of fiat currency. If you go to the G20, right, of which South Africa is a part, it's one big orthodoxy, right? It's a big kind of revolving door, old boys club. Trevor Manuel will be finance minister, and then he'll work for some big financial institution or some big, some big sort of transnational UN type body or World Bank type thing, and then he'll revolve back. And Tito Mboweni, the same thing will happen for him. So, and that's very much controlled by Washington, right? So the World Bank, the IMF, first and foremost, are institutions of that cement the dollar's dominance. That's their primary role. So the Fed is, if you like, America's central bank, and the IMF is, in a sense, America's central bank, or America's kind of financial surveillance operation and management operation of the global dollar system, right? Okay. So what do you want to do in that system? You want to lend dollars to people, right? You want to make them you want to make them have to you want to make them be short dollars and have to pay you back in dollars, so that they need to get hold of dollars. So you cement this whole kind of dollar system. So yes, it's a trade system. Yes, America's very powerful. It's very big, and it was able to get to that position. So everyone wants to trade in the dollar, but then you cement it with aid, loans, all these kinds of things. You put people on the hook, and you sort of cement this whole dollar system. So that's why I say that every fiat currency is basically a dollar derivative. And the dollar used to be. It's all right. We got a cat noises. Yeah. Get the cat out of here. No, it's cool. So every fiat currency is kind of a derivative of the dollar system, and you've got this this huge orthodoxy, right? You've got this G20, US dominated, European dominated orthodoxy, from which occasionally the Russians try to kind of deviate, and the Chinese obviously try to deviate, and then that's when you get sanctions and you get sort of all sorts of more sinister tools of the trade, right? So it's kind of, everyone's got a nice smiley face, but if you start deviating from the orthodoxy, for example, if the South African Central Bank said, you know what, we're not going to hold dollar reserves. These things are being debased. We're actually going to start buying Bitcoin, right? You're going to start seeing the propaganda ramping up against the South Africans.
Yeah.
You're going to start seeing various tools of the trade starting to be deployed. There's always a man from Washington somewhere close to the action in all these countries, and they're not going to tolerate that, right? And you're going to see, in a place like South Africa, because of who we are, we're not a bad country in the world, so they can't just treat us like bad guys. So they have to come in. You have to use soft power. They have to use suasion. They might. They'll do whatever they have to do in the background to sort of keep us in line.
Yeah, pay a couple of people off.
Yeah. Whereas with the Iranians, it's just like, you guys are bad. We're gonna cut you out of Swift. We're gonna drone a few of your targets, and we're going to kind of put you under immense pressure. So this is the system. So with that backdrop, I think that the one thing we have to sort of worry about, not in the short term, is the fact that if America is bounding down a road of significant debasement, it opens the door and gives license to everyone else to do the same thing. Yeah. Right. So what you'll often hear from our central bankers, from our treasury guys, is they'll talk about international best practice. They'll talk about, they're very attuned to what everyone else is doing.
Yes.
I always joke that we follow international worst practice, which is kind of true in this case as well. So right now, in the short term, our central bank looks kind of prudent, right?
Yeah.
They, interest rates are non-zero.
Yeah.
The repo rate's 3.5%.
It printed less in the US in percentage of
way less money supply growth, and also we've done it in a slightly different way. And the rand is strengthening, right? The rand's gone from 19 odd to the dollar to 13.70 or wherever we got to today. So in the short term, America is kind of misbehaving, creating all these dollars, talking about huge deficits, and South Africa is benefiting from the commodity boom. It's benefiting from a slightly less bad fiscal situation than we had a year ago or 6 months ago. The taxes have recovered a bit because of the commodity prices. Rand's on the front foot. Things haven't fallen over. The government hasn't fallen into the hands of crazy kleptocrat money printers.
And people are buying bonds here, right? They're willing to take some emerging market risk.
They're willing to buy our bonds because there's big fat yield on offer, and the government is not going to default anytime soon. A critical thing, so let's hone in on how does this go bad. Okay. So every hyperinflation results from a fiscal crisis. And that's not the only thing that causes it. So you can have a fiscal crisis and the government just goes bankrupt, you default. And if you don't print money, you have this massive credit crunch, you have this massive kind of deflation, you have this massive reallocation of resources, and you can actually be okay. Like, government going bankrupt is not you and me going bankrupt.
Yes.
It's just these kleptocrats who just kind of run out of money. Right? That's, in a way, kind of a best case scenario. Right.
But that's not what kleptocrats do, though.
Okay. So but if you want an example of this, it's an imperfect example. But if you want a recent high-profile example of how you can basically default and not have a hyperinflation, Greece. Okay? Why? Because Greece was forced at that time to be in the euro. And yes, the ECB is printing tons of money, but not in any kind of hyperinflationary dimension, and it gets diffused across the whole of the European Union, right? So you print money, it goes to Germany, it goes to Italy, it goes to all these places. So Greece was forced to be on this, let's call it
austerity, right?
This kind of hard money standard, this kind of reserve currency standard. And your typical kind of Keynesian economists predicted absolute catastrophe for Greece.
Yeah.
Okay. And what happened is, I mean, sure, they had a massive depression, but go and look at Greece.
Yeah.
Go and look at Greece in the last few years. Like it's back to growth.
Still there.
Still there. It's got too much regulation. It's got too much socialism. It's got too much welfare. It's still got its government is still too big and all that kind of stuff. But it basically didn't have to have hyperinflation. So I would say that a government default or a major fiscal crisis is probably a necessary but not sufficient condition for hyperinflation. So what you then also need is your own currency.
Yeah.
Okay. Tick. South Africa has that. And then I would say the final thing you need is a complete sort of giving over of your central bank to political control.
Like what happened in Zimbabwe, right?
Like what happened in Zimbabwe, happened in Venezuela, happened in Weimar Germany, wherever you see that. Now, this is critical. So you get two kinds of central banks. You get a banker's central bank and a politician's central bank. A banker's central bank is what you have in South Africa, is what you have in Australia, is what you have in Japan, Britain, Europe, the US. These are formal, sophisticated financial systems, okay? And what you get in these systems is the bankers are very powerful, and the bankers effectively regulate the central bank more than the other way around. And in a way, that is the original rationale of the Fed itself, the creature from Jekyll Island, is that it was essentially the cartel mechanism for the private banks. The private banks got together with the politicians and said, look, we need a system where we can expand credit, and when things go bang, we need this entity to come in, and they would have couched it in language like we need to create financial stability and we need to do all this stuff. So that is that system. Now, if you think about it, banks, right? So what happens to banks in hyperinflation? I mean, they eventually die. Right? Banks get totally wiped out. I mean, bear in mind, banks have massive loans out into, I mean, that's their thing, right? They've got these huge loan assets for which they're owed back nominal amounts, right? They lent you 5 million rand for a house, you owe them 5 million rand plus interest accruing over time. Hyperinflation comes along, and 5 million rand, is what you can buy a bar of soap for. Banks are getting absolutely wiped out, right? So the bankers don't want hyperinflation, and that's critical. Like, it's really important for people to understand this, that as long as you see and you can sort of interpret that a central bank is mainly a banker's central bank, you need to be careful of going off the deep end on hyperinflation predictions, because hyperinflation is a super extreme scenario. So a place like South Africa is obviously a place where, so we have a banker's central bank, but it's a place where, with a few little changes in the politics and a kind of few maneuvers by some smart players, we can become a politician's central bank. Our central bank can become a politician's central bank.
What is the last SOE that's kind of still hasn't been totally captured, I suppose?
So the SARB is, I would say, all things considered, pretty well run. South Africa's got a sensible banking system. Yes, I think the modern fiat fractional reserve system is a broken system, sort of at a very deep and fundamental level. But these are serious businesses that provide good services to people, right? I mean, our South African banks are smart, serious businesses, and they certainly run by credible people, and they do a lot of good, and they also can create explosions in the business cycle now and again. Okay, so that's them. So the Zimbabwe scenario is fiscal crisis, is you have your own currency, and the fiscal crisis arises from political dysfunction, and then creates even more political dysfunction, and then you go down that road. And then once you've started down that road, it becomes a very difficult road to pull back from. So just to say, I mean, so this is the kind of big faction fight that we got going on in the ANC. We've got these different factions. There is definitely a more radical faction that lost our light. I think we look all right.
There's
definitely a more radical faction that is of a mind to, and we've heard this literally from various ANC cadres, let's say, they're of a mind to capture the central bank for money printing purposes.
This is what the Esmagashula expressly says he wants to do.
He expressly said that, right?
Yeah.
Now, okay, let me just quickly pull back and try and sort of wrap this little answer up. What have you got in the US? You've obviously got a banker's central bank.
Yeah.
Okay, you've had that for 100 years. But you are seeing more and more politicization of that central bank. Okay,
absolutely.
now that doesn't just become a political mess overnight.
Yeah.
Okay, you've got a very powerful country. You've got very deep financial markets. You've got tons of real capital there. Okay, as much as they're consuming capital and degrading their capital base and just running awful policies, these are rich places, right? England, rich place. Go to London, tons of capital, loads of massive asset managers, just deep, big, liquid, powerful financial systems. You don't just click your fingers, print a bit of money one year and create a hyperinflation in those systems. So we've got to just we just got to keep that perspective.
As 2020 shows you. Like, like, doesn't do much.
Well, so you might not see it in everyday goods and services. And look, bear in mind, hey, America's created about 30 to 40% money supply growth over the last year. Proper hyperinflation printing is like you triple your money supply in 6 months.
Yeah.
It's a completely it's completely off the charts. So I think the guys who are sort of constantly calling for hyperinflation, they're constantly wrong, and that's why they're wrong. Right? They're sort of misdiagnosing how you get there. Just because you created a bunch of money with a T in the word trillion, yes, it's a big number, and so it calls to mind like the $100 trillion Zim note. But we've got to keep in perspective. So, for example, let's say the dollar is actually heading for a kind of a crisis. Okay, they've just announced a $6 trillion desire for a $6 trillion deficit. The Fed's going hell for leather on printing. The dollar index is trading at around 90 at the moment. Let's say that thing collapses in the next few months. Realistically, where's it going to go? 70? 60? Okay, that would be an enormous collapse in the dollar, right? The rand's going to go to like 10 or whatever it is. But that's not hyperinflation.
Yeah.
That's just a big collapse in the dollar. You might get 5 or 10% inflation in the US. All big numbers, right? The bond yields are going to have to spike. That could set in motion panic. That could set in motion a situation where the Democrats go, right, these financial actors have screwed us over one last time. No more. Congress is going to take control of the Fed.
Nationalize the
Fed. Basically, Nancy Pelosi is now in charge of she has to okay Fed decisions. You've now got checks in the mail to people being authorized by Congress. And it becomes and now you're politicizing the central bank. And that's when you can start down this road. And now you get a situation where inflation actually stays high. So it starts eating into all the money you've created, right? So you create all this money, you create a monetary illusion. Inflation starts eating away at that, more political pressure for printing. And this is how you can bound down that sort of road. Now, there's a lot of water that would have to flow under that bridge to get to hyperinflation. However, if even like a little bit of what I've described is a possible future for America, you want to be holding good real estate, good crypto. You want to be holding Bitcoin. You want to be holding gold. Quite frankly, you want to be holding commodities, getting exposure to good commodity funds. Quite frankly, you want to be holding things that aren't money. That aren't dollar money, right? And
things
so
on demand.
Now, of course, in that world. If the rand in that scenario goes to 11 rand to the dollar before the SARB realizes that it can also start printing, because if the dollar's tanking, then we always get excited that we can print rands. But
that makes our exports look unattractive. Right?
So there's potentially an interim period there where the rand looks really hot, and South Africa just looks really solid, right? And because the dollar's tanking, guys are going to be there's going to be a big carry trade there. They're going to probably keep rates low. Dollars are going to be flooding out to emerging markets to find yield, to find a place that's not collapsing. So that is one scenario. And my bet would be that in that world, the central bank feels very emboldened to print rands and absorb those dollar flows that are coming into the country. And that's exactly what happened from the early 2000s to 2008, 9, 10. We had QE in South Africa. So we had these big dollar inflows. Guys were buying our bonds, they were buying our stocks, and we were exporting a lot of commodities. So we had these dollar receipts. And what did the SARB do? It saw all these dollars hitting our market. The rand went down to about 550. I think it was at its strongest in about 2005 or so. And what did the SARB do? It just printed rands, went into the banking system, purchased dollars, and purchased US treasuries with those dollars. So the SARB sits with these treasury assets. That is QE. That was rand QE, but we bought dollar assets. And there's a real chance that if the US keeps going down this road, it's going to suck the whole world into this kind of policy where emerging market central banks go, oh, brilliant. We can print, $1 trillion rand, and the rand dollar is going to go to 15.
Yeah.
From 10 to 15. Like, no one's going to bat an eyelid at that. The rand should be at 15 to $1. So they'll print it up. What's that going to do? It's going to create inflation in South Africa. It's going to debase the rand against goods and services. It's going to push South African stocks sky high. And again, if you're stuck holding rand cash and real interest rates are zero, you're not going to be going anywhere. So the posture that an investor must take at this point is not tomorrow we're going to wake up and currencies are dead and hyperinflation is upon us. Trust me, if you're just savvy and watching some of these things I'm talking about, we'll see it coming. We'll see it coming, right? Like, you can see the politicization of central bank. You can see fiscal crises getting, nearing and getting worse and worse. I'm not saying that these things can't surprise us at all, but the point is this is not something that's going to happen tomorrow.
Yep.
At the same time, the sort of game, the chessboard, if you like, is set up so that it's very hard for us to avoid, I think, some bad outcomes. Now, I don't know where they're going to show up exactly. I don't know what the trigger is going to be. None of us know that sort of stuff. But if you're not saying to yourself with the world as it is right now, that you want to be holding a spread of sound crypto, maybe gold, maybe good companies, maybe some real estate, if you can get hold of it. Some real estate is ridiculously priced, so maybe not a good asset.
If you're not in Toronto.
Sydney.
But getting away from these currencies that central banks are treating like playthings. And I think that has to be the investment posture. Timing is always going to be tough, and you're going to go on a roller coaster ride. And the best thing I can say, the only thing I can really say to you about how to survive that roller coaster is like, join a club of people who are doing it with you.
Yeah.
Get into the community.
Absolutely.
And guys are going to pep talk each other through this.
You need emotional support.
You did. That's what took me through that 3-year bear market.
Yeah.
It was emotional support.
You need it.
Yeah. So I think all this is critical. Having these conversations, putting out podcasts like this. That's the best way I can describe the lay of the land at the moment.
But what do you think, so just touching on those unintended consequences, like what do you think some of them might manifest as? I mean, it's really hard to predict what an unintended consequence is, but
of what specifically?
Of the largesse of central banks around the world doing all of this. And let's say, for example, the Fed keeps printing. As a result, the SARB keeps printing as well, and the Turkish central bank Argentina, and everyone keeps printing. And then what happens when people run out of faith in emerging markets because they're printing so much as well, and they start to deleverage and move out of or divest out of emerging markets.
So look, obviously, there's so many moving parts to this. I would say that, again, if you think of unintended consequences, second order, third order effects of this kind of stuff. These are obviously by definition not something you can see very easily, but you can sort of map out the kinds of things that you're looking at, right? So geopolitical and political tension and conflict has to be one of the things that sparks, right? So, and where would that come from? So there's a few different places it would come from. From a geopolitical perspective, how can you tolerate the guys who are the custodians of the reserve currency, a currency which you hold in reserve, in South Africa to the tune of SARB to the tune of $50 billion.
Yeah.
Okay, it's a lot of money.
Yeah.
And many other central banks, like you can't tolerate America doing what it's doing with the dollar, right? At some point, you got to say, this is our savings, you know, and these guys are giving us 0% on them and printing it like crazy.
Yeah.
Now, for a place like South Africa, it can shout at the clouds. America doesn't really care.
Yeah.
But a place like China, a place like Russia, a place like Europe.
I mean, China and Russia are already voting with their feet there, right?
Correct. Yeah. So you're already getting all sorts of things going on. Now, the dollar's not about to collapse and fall out of use.
Yeah.
But the early chess moves are in play.
Yeah.
Right. So I think there's all sorts of geopolitical tension that can arise from this. You know, China becoming a very powerful country. I mean, yes, it's governed by a terrible kind of ideology.
Yeah.
But that doesn't mean the Chinese are evil.
No.
You know, the Chinese are Chinese. They're doing what they're doing. They've got a government that they have a very deferential culture towards kind of authority and all that. That's the Chinese, right?
Yeah.
If America was solid, healthy economy, low debt, strong currency, low inflation in terms of money supply growth, and just like a healthy place, they wouldn't have to worry about China. China getting rich should be good for everyone.
Yeah.
Of course, China's going to flex its muscles in the South China Sea and all this sort of stuff. But basically, I think we're seeing the rise of geopolitical tension because we're seeing the demise of economic health.
Yeah.
We're seeing the demise of currency health. That's going to bring us to geopolitical problems. It was the German hyperinflation that gives rise to Nazism, that gives rise to the extreme conditions of World War II, right? So, so geopolitical stuff. Quickly, internal political stuff. The big kind of political shifts that happened in the Middle East around 2011 were the result of a big echo inflation on commodities. After the 08-09 bust, you had this big inflation cycle that came through. Food prices went crazy. We've got agri prices going up. Are they going to sustain? If they do, that's going to start putting people under pressure. It's going to start creating serious inflation. If you now throw into the mix a debasing rand, because right now the rand's strengthening, so it's kind of cushioning some of this.
So imports are cheaper.
This commodity stuff. So imports, so it's kind of offsetting each other a little bit. Commodity prices, look, agri prices are up about 50%, depending on which agri you're looking at. Rands maybe from last year, it's obviously 20, 30% stronger, 20% stronger. So it's not offsetting it completely, but through the supply chain, guys at the retail level are able to sort of contain those prices. When you talk global debasement of currency, it's not just that you're printing money and everything else is equal. You are destroying the capital base. You're consuming capital. And so you're actually creating a condition of poor economic growth and rising prices. Inflation, in a sense, is always stagflation.
Yeah.
Inflation is the opposite of economic growth. And the point I just want to make there is that as you start getting this debasement and you start seeing real price increases that stick, because that's the real issue. Is like if we're gonna go through a phase where the world becomes, at least at the margin, a little bit less well off. Yeah. We don't produce as much stuff and we're just kind of not getting that well off. What does that actually mean? What does that become? It becomes a world where it's more expensive to get stuff, right? And that's the essence of economic progress, is it's easier to get stuff. Like 150 years ago, grapes were a huge luxury, table grapes. Yeah. Like you ate table grapes if you were top elite.
Yes. Yes.
Now you go down to the spa and you buy some table grapes. Yeah. So what this manifests in is rising costs of living, real rising costs of living, which you see in the nominal currency debasement, but you feel as well. And the way to get ahead of that is obviously own assets, own money that's sound, that's gonna retain its value. But the unintended consequence of that is that we know that there's tons of people who don't own crypto, right, who are way outside of that space. South Africa, we've got a lot of poor people here. They get hit very hard by food increases. Yeah, that can lead to kind of revolutionary outcomes. Maybe even positive ones where they totally reject the ANC and EFF types and boot them out. maybe they reject the ANC and go all in on Julius Malema, and we're off to the races on some kind of, heavy socialist path. So there's all sorts of ways this can play out, and all sorts of unintended consequences. So, of course, and then final thing to say on this, I suppose, is that there's all sorts of kind of regulatory things that we don't know, that we can't foresee. And you kind of alluded to this earlier, like what's their next trick? What are these guys going to do? Are they going to, right now, like we live in a world where you cannot travel.
Yeah.
Like
especially as a South African, right? Like we can go to 3 countries.
Yeah, like basically, give or take, you are banned from flying anywhere, right? No one, 18 months ago, you told that to someone, like, so you can't travel anywhere. So I think regulatory uncertainty is a massive one. And the only thing I would personally say in the face of that is you got to simplify your life.
Yeah.
You got to keep things very simple and straightforward. If you get too kind of fancy and exposed and
lev it up. Yeah.
Lev it up. Have your eggs in sort of vulnerable baskets, things that are subject to confiscation or
Doge.
or just heavy regulatory oversight. None of this is perfectly avoidable.
Yeah.
But I think that's got to be part of this, right? So I think we're on the road to stateless native internet money.
Yeah.
That journey is like massively bumpy. It's not just bumps in the
straight.
road. It's gorges and valleys and hills, and it's going to take a lot of fortitude to get through. And like at the end of the day, we aren't power brokers in all this, right?
Yeah,
we're not big players in the game here, and so. But in a way, that's also cool, So I think we.
That's what Bitcoin's about, though, right? It's about the like grassroots.
Yeah, and I think one thing that irritates me about the space, and I'm not saying like the Bitcoin space per se. I'm just saying like the surrounding space is the debates. Is Bitcoin money? Isn't it money?
Yeah.
The sort of academic minutia on this stuff, or is China
banning Bitcoin?
Yeah, is there too much mining in China, and what does that mean? And is there a 51% attack coming? And like all this sort of stuff. And a lot of that stuff's out of our control. A lot of it is also just academic fluff.
Yeah.
And at the end of the day, like I don't care what George Selgin or
Peter Schiff,
or there's a few guys. Like I don't care what these guys think about whether Bitcoin is money or a currency or isn't one or what have you. Like you've got to evaluate the technology. If you think in a world where money can be created, control P, and trillions can be created, like is immutable digital scarcity a valuable asset, right? Like in a digitized internet world, is a native, perfectly scarce currency, is it like riskless? Is there no possible humanly conceivable way that Bitcoin can be challenged or like, no, of course not. Like there's all these scenarios, but come on, that's what risk management is, right? Like if you don't, it's amazing to me how you get people who've never owned a cryptocurrency. They got tons of opinions. They're debating the thing. I'm like, dude, just take a few thousand rand, like a few thousand rand, a few $1,000, whatever you want, and just
get some skin in the game.
Dip your toe in. Like
anyway, incentivize to learn.
Like feel it out. So it's amazing to me how you get people saying it's going to zero. It's fundamentally worth zero, and all this kind of stuff. And they don't own it. They're not actually playing in the space. So I just feel that these things are, there comes a time to stop the sort of fluffy debates on the side and just get busy building something.
Yeah.
Own some crypto. If depending on your financial situation, if you are like all in, given your particular life situation, that could be a sort of imprudent idea. For other people, that's the right choice.
Yeah.
But the bottom line is just like do. You gotta get in the game. You gotta get in the game in some way. And that's why for me, when I see debates happening, obviously you stay engaged with the intellectual side of this thing because that's what we're interested in, and that's what's happening, as we're talking about now. But like, there's so many people out there living in their heads and on Twitter, you know? And I feel like there's not enough people, not just building in the crypto space, because, you know, if we fix money, but like morals and society and structure and order just like totally implodes. Now, okay, they're related, but like, you know, that's not going to be good enough either. So yes, build stuff here, build stuff in payments. That's great. There's a huge revolution going on there. But on this side, you know, we need to fight socialism. We need to build robust business institutions and infrastructure. We need to stop ridiculous concentration of tech power. We need to stop ridiculous cancel cultures from the left, you know, from sort of sidelining people and really kind of distorting society. So my point is, there's tons of work to be done. We're all in a little space. I'm not a crypto expert, so like when I see guys building things like Lightning Network and doing all that stuff, I'm just in awe. You know,
what's your feelings amazing. On shitcoins? Like, what do you think's going to happen to them? I mean, I think they're just a baby of this crap environment we're in, where people don't respect money.
Look, I mean, I think that it's
a pretty loaded question, right?
Look, there's tons of bad stuff out there. Again, because I'm not an expert, I probably, because I don't know enough, I'm not convicted enough to call myself a maxi. Right. So for me, it's like there's some fascinating stuff going on in the DeFi space now. Does that have to be Ethereum? Can it be a Bitcoin protocol? Can Bitcoin underpin the system with some Ethereum sort of layers on top? Are those symbiotic? Like, I don't know enough about that space. For me, I hedge a little bit on that, and I guess empirically that's been a good decision. Okay, it may be that going forward, all that stuff disintegrates. The maxi position is that even Ethereum eventually is just going to puke and implode. And I guess well, to me personally, again, because of my knowledge base, I just want to go a bit hedged through that process. What I think is happening in the DeFi space, you know, whoever wins that, whatever protocols kind of come to dominate that space, what's going on fundamentally is that conventional banking as we know it is getting usurped, right, by this phenomenal system. Raoul Pal put out a great tweet the other day, I think it was yesterday, just saying, like, by the way, you know, we've just had like this enormous drawdown on $1 trillion or $2 trillion asset class, and you know, there was no plunge protection team needed. There was no one failed. You know, no obligation failed. I mean, of course, there's going to be small failures. So in that sense, people failed, but it was like a clear out. It was like a healthy, liquidative process. You know, if you saw the same drawdown in the S&P 500 now, right? So, okay, it's a much bigger asset class, but still, I mean, it's a great point, right? That there's an amazing ecosystem there. So I don't know who wins. I mean, I still feel that Bitcoin is most fundamentally like a sort of reserve base layer
settlement money.
Settlement money. Yes, with all these other layers on top, can it be kind of the original white paper, like digital cash? Can you do like micropayments? You know, I don't know the answer to that, but do I want to own a piece of 21 million Bitcoin that's going to form the like base of this inverted pyramid of the new financial system? You got to want to own that.
It's a no-brainer,
right? And then what wins and what doesn't win on top of that is so hard to know and understand. So for me, I hedge myself a little bit. Obviously, tons of coins are going to fail and go to zero, and many have already. Tokens, all this kind of stuff, and of course, this is all bound up in a mania, right? And a bubble. And there's a little bit of tech bubble 1.0 flavor in this, in the sense that, like, I don't know, a stock like Apple in 2000 probably fell 80%. And then went up 100x or 10x, whatever it did from there. So there's going to be, but of course, some companies just never recovered, right? So through these huge crashes, you're going to get valid, necessary destruction of all these sort of crappy projects, and the guys that can come through that are just going to go crazy. So So not, unfortunately, sorry boys, I'm not a total maxi.
Not yet.
Yeah, and look, I mean, you guys should get Chris Becker from Investec on.
Yeah, for sure.
You know, he's a great guy, he's a smart guy, and you know, I think it's important to engage with a good sort of Ethereum argument. I think the guys who are saying that Ethereum is like better money than Bitcoin, I think that's wrong.
Yeah.
But it certainly seems possible to me that Ethereum and that whole network, that whole big distributed computer, can do interesting stuff and is like potentially a very powerful thing, and potentially like has symbiosis with Bitcoin as the money layer underneath. So like, again, I'm talking a little bit beyond my sort of skill set here, but get a guy like Chris on as well. And I think for the maxis, test your thesis the whole time. Get good, robust, like disagreement on it.
Yeah.
And like personally, I would say for new guys coming in, to hedge, but not like across many coins. Like to me, a Doge and all these kinds of things, I just don't see why you'd want to own that stuff. Obviously, they can go crazy. So personally, I like a sort of Bitcoin, Ethereum 1-2. And I know that's like probably sacrilegious on this show, but anyway, like engage with better, smarter guys than me on the maxi discussion.
I think the fantastic thing about Ethereum and altcoins is they provide like an amazing test bed for where cool new ideas can be tested and to see how they work in real time. And I mean, there's
and some of those potentially get like
adopted into
Bitcoin
and built on top of Bitcoin, on top of Lightning and layer 3 that's coming in, and etc. You know, if you look at the things that Monero has done with like privacy, and like there's a whole bunch of that can be adopted. Like now we're getting taproot in Bitcoin, because the protocol is consensus is such a slow, laborious process. Like it takes a very long time for new things to be developed, and that's a feature, not a bug.
Yes.
So by virtue of that, other coins are going to iterate faster and evolve faster and fail faster, because when you're going into this, you don't know from the outset like what's right and what's wrong. So
I really like that idea. I haven't spent enough time thinking about that, but the idea that Bitcoin can really just bide its time.
Absolutely.
It's got this immutable first mover, huge security network
effect.
Big network effect.
Compounded advantage.
And it can just kind of look and see and pick and choose.
And this argument is the heart of maximalism.
Yeah.
This is what it's about.
Because also with things like Ethereum, it's just, you know, coming from a traditional investment background, I grew to really hate, and working with a lot of banks, I grew to hate them. And that's why what really drew me to Bitcoin. And now
your hatred for banks.
And what I see Ethereum trying to do to move to proof of stake, I think that is another risk you really need to think about. How the hell do you hedge that? Okay. And I guess you're hedging it with Bitcoin. And I for one really think it's going to fail dramatically, but also like what the hell are they doing? Because
they're just building another central bank.
You know, basically your proof of work is the amount of Ethereum you have, and therefore you have the voting power, which is just creating some form of new aristocracy. But you know, with Bitcoin, I really believe it's the only way that blockchains can work, because all that work is the only way you find the utter truth of things.
It's the only real use case. Otherwise, just use a
SQL. It took me a long time to get to that point. A lot of hours.
And I mean, like I totally respect that. And also, I mean, some of the guys in the space who I have massive respect for, and obviously a guy like Safety Namos is one of them. They're where you are, right? And I suppose I just, you know, there's guys that I really respect as well who take the opposing view, and I'm actually a very strongly opinionated, convicted guy on stuff when I go there, right? So if I really applied myself in this, I'd end up falling in, you know, one camp or another probably, you know. And as I say, so for me, the hedge is really a function of like I just don't know enough. I just don't have enough time, and I've got to kind of sit back and go, wow, I respect these guys. These guys. I'm drawing off their authority a little bit and their knowledge. And like, I'm going to be totally honest, as amazing as this space is, I don't know that I've got all the passion and all the energy to like go all in, you know? So for me, it's kind of just stand back, you guys are smart. I chat to you. I kind of get both sides, and I sort of construct my portfolio accordingly.
But that's a very, very smart way to do it. If you're not going to throw yourself into the deep end completely and not have that full conviction, the smartest way to do it is to hedge yourself.
Yeah.
Because otherwise you just taking someone else's opinion and you don't really know why you're doing things.
But also, like, the average person on the side of the street, not the average, the crypto guy, knows that you still got another 95% of people to adopt. And 1% of them will be maxis immediately, and the other 94% will buy a lot of shitcoins.
And
then
another 10% upside because of that.
Slowly become maxis over time.
If I was a true capitalist without any integrity, I didn't know any. I knew all this. I'd be in a lot of shitcoins.
Go sell shitcoins.
Well, look, if you were, and this is going to happen, by the way. So, like, this stuff is all moving into it's more and more moving into the conventional fund management space.
Yeah.
Right. So. Okay, it's not there yet, but there's a lot of funds that are either crypto funds or have a certain little pot that they can allocate to crypto now, right? There's increasing interest in this. Just as a fund manager from a sort of very conservative fiduciary perspective, just how it works, whether you like it or not, like most mandates are going to say, well, you can't just own Bitcoin. Like, you're going to need to go,
absolutely,
you're going to need to have a market cap weighted allocation or whatever, however that looks. And so if crypto is going to go mainstream in fund management, funds under management globally, I don't even know, $100 trillion, maybe $200 trillion, somewhere there. If guys are going to start allocating 5-10% of those funds, it just, and if by market cap, Ethereum is a third of the space or whatever that is, like, there's flow there, right?
Yeah. And they have to, because if they just do Bitcoin, what the hell are they selling? Because how do you just sell your I manage Bitcoin on your behalf?
I just hold it in a hardware wallet.
Sell that I manage a portfolio.
I'm going to reweight it as the market moves.
But over the long term, they'll just have their lunch eaten because the hodlers will outperform them, which is what's happened over the last 12 years. The hodler with a hardware wallet has outperformed all of the like crypto 20 or like top 10 indexes of cryptocurrencies.
So that's true, and we know that, but
conventional wisdom doesn't say that.
Well, your average person who is going to entrust some of their funds, most people don't have time for any of this stuff, right? They're working their job, they're fetching their kids from school, they're watching a bit of TV at night, they're struggling, right?
On the Fiat hamster wheel,
exactly. And that's just where people are, and that's not going to change overnight, right? So the average person is going to say, Mr. Fund Manager, just get me in this stuff. When he buys a 50% Bitcoin, 30% Ethereum, and then rats and mice for the rest portfolio, and he manages that portfolio, and it's up 40% year on year,
he's not going to care.
The retail client's just going to be like, amazing, and the fact that Ricky did 55%, they're not going to care at all. This is a person who just wants that. So I think that we got to. So I think from that perspective, this won't change a maxi because
he's going to make more money just being
and maybe not in the short term, but in his mind, the 10-year trade is like a no-brainer, right? Or even the 5 to 10 year trade. But if you are, the thing with investing, and I don't really like this, but it sort of just is. It's like there's what you believe about the world, but then there's what you believe about what other people believe about the world, right? So you might think, buying an oil company is a great trade, and I think it is actually a great trade. But you've got to look at everyone else and go, what? Everyone is like going crazy for ESG and sustainable stuff and renewable stuff, and I think that's maybe like unsustainable actually, and not profitable and not really workable and all that. But if there's $10 trillion that are going to flow into that space, in the next 5 years, and I've got to show results to my clients. And again, I don't like this about the investment world because it can just get so manipulated by regulatory policy and flow and all this kind of stuff. But you can see how in the real day-to-day world of fund management, guys will go there.
Totally.
Right. And so you may not like it, but you got to outcompete your peers. You got to be in the game.
Yes.
And you're going to have to play that a little bit.
So one last question before we wrap up, but Bitcoin, and it's clearly a first mover advantage, right? So if you get into the game early and you buy Bitcoin early, you get in cheaper, and the longer you hold for, the better your gains are. So if we know that the world is going a certain way because of QE infinite and money printing infinite, and all countries are effectively doing the same, there's going to be some game theory for someone to break that mold. And I'm not saying at the nation state level, because they'll get bombed, or there'll be other forces applied to them. But it happens at the individual level first. We all start opting out and we start holding Bitcoin instead of US dollars or whatever, pounds, whatever we're going to hold. But then it starts growing from that to larger institutions. And we've seen this with companies adopting Bitcoin, putting Bitcoin on the balance sheet. And in my mind, I'm looking at the position that countries like Argentina, South Africa, Turkey, Brazil, emerging markets are in, where you've got semi-kleptocratic governments running the show that aren't representing the will of the people. And you've got these civic institutions that are starting to form.
Yeah.
Do you see anything happening there with civic institutions adopting Bitcoin to get outsized financial returns and more influence than over the long term?
Yeah, I do. And I think their most important incentive and reason for doing so, quite frankly, is to get out of the canceling and censoring space.
Yes, absolutely.
So I think if you go to a fairly big, and therefore almost by definition fairly conservative institution, whether it's a business, a big company, or a big civil rights organization, or whatever civil society organization, they can't just like take their treasury and kind of gamble it away, which unless you have to spend time really explaining the space, right? Else they will feel like they literally are throwing their treasury away.
Yeah.
Not everyone's Michael Saylor, right?
Yeah.
So,
but I suppose when does it become apparent to them that, for example, the real or the lira or the rand is failing? So they have to make a plan.
Sure. So I mean, that's, I suppose, an emergent property of inflation and the loss of credibility of that currency. So like the rand, for all you want to say about the dirty old rand, it's not a currency that's seeing its credibility collapse.
Yeah.
Right. Like,
it's not the lira.
There's rands in my wallet, and like I know that when I wake up tomorrow, it's going to be roughly the same value as it is today, and that's the rand. So to get to the place where you really drive adoption across all these sorts of institutions, you're going to have to, yes, you can go and do an evangelism, and that'll work on, on the brightest of them, but mostly they're going to need to see inflation emerging. And like that means petrol prices go to 25 rand. That means, that means real pain. And you start seeing that. So that's the first thing. But as I said, I think the big thing that you can convince these guys on is, listen, you are trying to do things that protect yourself from the state, and you can do a bunch of things. But the one thing you can't do right now is avoid them literally just clamping down on your bank accounts, right?
And the banks will bend the knee.
The banks will bend the knee. And I mean, at the end of the day, these guys control how you get paid and pay.
Yeah.
The payment system is a separate thing from the rand. I mean, it's separate but linked, right? So there's the rand, but that payment system is essentially a state-owned system, right? And in the SARB Act, the SARB and the government, effectively the same thing, the state has the prerogative to be able to basically own any payments company. It can get in there, it can get its sort of hands on that, right? So, I mean, you must go and look at that, but I stand to be corrected on some of the specifics of that. But basically, they want in on payments. They see that as a very important thing, because, of course, if you can do payment stuff outside of their purview, then you can do currency stuff outside of their purview. And now you're violating the legal tender.
And they love a capital control. And
they love monopoly over the space. So all that to say that I think, for me, a huge thing that I see that we're moving towards is the need for censorship resistant, not just money, but like payment networks.
Yes.
And obviously Bitcoin is a network and a money,
Yes.
but it's not strictly untraceable. It's not strictly anonymous. It's not, and obviously there's that's also a feature rather than a bug, because of course you need this like transparent ledger and all stuff, but you need to be able to get into a plane where you can be uncancelled financially. That's critical. And that's where I think there is a role initially for stable coins, right? I think like,
but stable coins can be censored though.
So again, I don't know all the technicalities of the space. I'm saying if you could get some sort of untraceable, at least at the very least, hard to stop, hard to cancel stable coin, you can get guys transacting in a plane where they feel comfortable accepting payments, because you know what, if I need to, via I can get back into rands or dollars at par, and I kind of feel comfortable with that.
I suppose that's the use case for DAI, right? That's Ethereum stable
I
coin.
do see. Look, so Taproot coming out hopefully by November earliest means there's a lot of room now for more privacy. First of all, but also for smart contracts now. But there is ability for smart contracts with Bitcoin on the third layer. But now this actually brings it to the first.
Okay.
And what you can probably look at through this, and I think it could happen, is that there will be real decentralized finance DeFi on Bitcoin where people can start, hosting a basket of something in order to stabilize a like sats or 100 sats to a specific denomination that they need to, and they can through these many contracts start aggregating things. And I believe exactly what you're saying. I think it is needed. The volatility will be there for some time. And people need to get out of that.
So there's nothing more volatile than your bank account shut off, though. So
So I mean, there's two things there. So we know that, like, I mean, someone made this great analogy a few weeks ago on Twitter. They said basically, like, when you see the Bitcoin price, or I mean any crypto, quite frankly, but like say take Bitcoin, what you're basically seeing is, like, if you could price an early stage angel investment. Okay, if that had like a floating, transparent equity price, right, it would be all over the show. Right? It would be like, is this thing going to change the world, or is it zero? And it's just, it'll be going. It's a little bit of like what you're seeing with these things, right? You're seeing this emergent, nascent technology, and it happens to have a transparent, tradable market price,
real-time pricing,
in the super early stages of its adoption. So it's all over the show. So, like, quite honestly, like, guys who do technicals, like as if they were analyzing Apple. Who do technicals can be a little bit self-fulfilling. Guys are trading it can sort of work. And so, I'm not throwing that out completely, but like, you're seeing early stage adoption. It's hugely volatile. So that's amazing. But it does put people off. There's just no question about it. Like,
for sure.
To say, I want to accept this thing, I want to trade in this thing. Yes, it's super volatile getting your bank account shut off. That's why I think some sort of hybrid, and I'm not smart enough to do this, but I know that there's got to be people working on this kind of stuff. We're moving to a place where, as we go through these valleys on the way to immutable, scarce internet money, we're going to get governments doing really horrible things, right? And the world is super ideological right now. And it's particularly ideological towards socialism, leftism, wokeism, kind of this whole cancel culture vibe, and all that comes with. And so to be a dissident organization in this world is a big risk. To be trapped and stuck in the conventional banking system, or to be 100% exposed to that system rather than, say, 50% or 25% exposed, is kind of becoming an intolerable risk for a very big organization, right? Because you can have a situation where you can end an organization's ability to do anything,
and all of the hard work they've done for decades.
So I think that's for me where it is. I think, like, the treasury gains, like the Michael Saylor treasury gains, he's a unique cat, right? And there's going to be a few more guys like him, but I mean, he's on a treasury roller coaster right now, right? And so he's got to wear that. Your average conservative prudential kind of institution is not going to do that.
No.
But what they definitely will resonate with, and certainly in South Africa, civil society organizations that know that the state is, essentially a nefarious actor,
and coming for them sooner or later.
Coming for them in various ways. You've got to know that you want to be able to transact in a plane that, if not, that is, if it's not perfectly immutable and censorship resistant, at least 95% of the way there, or something that makes it really hard for these guys to do that. That to me is huge, and that's why I sort of say it's kind of got to be some sort of stable environment that has decentralization there as well.
They can stabilize it by not having to use it as a medium of exchange. They can just use it as a store of value, at least initially, because it's that first mover advantage, right? So like if you had to start accumulating 1%, 2% of your monthly inflows just into store of value Bitcoin over a 5-year period, your financial clout after 5 years will be 100x.
The volatility would just be enormous to the upside.
But the thing is, not everyone will do it because of the reasons we just discussed now, because people have different risk appetites, and institutions have different risk appetites. So if they just start accumulating from a store of value perspective, that when the repression comes, they got a war chest to be able to, float themselves and figure it out before they have to move to that medium of account. I think that's the real utility, and not to just adopt it from the start. It's like, he can use this as money now, because you'll fall flat in your face. Won't work.
No, I mean, and I think that's probably the right sort of strategy, whether it's 1% or, a lot more risk appetite, maybe 5 or 10%, but let's go with 1 or 2%. You just do that. You know what you're taking on. I mean, I think even to get to that level, you're going to need some seriously good evangelism there.
Absolutely.
And really good, insight for the guys. And so that might start out as 0.1%. The guys will dip in and see how it goes. But anyway, so that's got to be done. And then in parallel to that, we've got to get to a place where we're figuring out, and it's pretty subversive. It's pretty, in a sense, it's not aggressive, it's defensive. But it's, the governments won't like it, but getting to a place where we can actually transact like we can do with cash in our wallets right now. Like you and me can have a cash transaction. No one can know about that.
Well, this is what the Lightning Network gives us, right? Like you and I have done Lightning transactions. Brandon and I do it all the time. This is a game changer, It's not perfect by any means yet, but versus where it was 2 years ago, it's like, it's incredible.
Look, it's fast and it's private, so it's starting off the right foot.
Well, that's the thing. I mean, it's, the privacy, I think, is going to be critical because, and it's going to become a massive selling point of this whole thing, right? Because we are racing towards central bank digital currencies, and that is a dystopia of linking your payments to, for example, your credit, your social status, your credit score, right? I mean, like, you're buying too much meat.
Yes.
Russell spent, 1,000 Rand on meat this month. He's hit his cap. Every Rand he goes over that, he's going to lose like social credit because he's not being green enough. He's like destroying the planet.
Oh my God.
It's
I'm getting cold sweats thinking about this. So this is like Orwell's worst nightmare.
Look, we can paint the worst kind of scenarios. Again, I go back to the fact that I don't think people are going to accept that in the long run. And this is going to be a huge legitimacy problem for governments, but they're going to try.
Yeah.
And if we go down that road, the privacy dimension and, cryptography, part of it is, of course, the way you secure something in a decentralized fashion. That's how you secure the Bitcoin network. But a part of it has to be scrambling signals on transactions, right? That has to be where it goes.
Absolutely.
We need to be able to. I think this is the gold standard, so to speak, has to be that I can transact with you online, and it's like I'm paying you 10 Rand from my wallet now, like in terms of privacy.
Yeah, absolutely.
No one can know about it. No one has to know about it.
Absolutely.
That is pure monetary freedom and trade freedom.
Yeah.
Right. You and I should be able to transact in something. You want to sell me something secondhand, I give you cash.
Yeah.
No one needs to know about that. That is just value creation between you and me. And that's where we've got to get to in a like ubiquitous, sound, solid way on internet money.
Yeah.
And so that, I know there's thousands and probably hundreds of thousands of smart guys working on this. That's where we got to get to on this.
And they've worked hard on it so far, and they've done a fucking good job.
Yeah,
you know,
yeah.
like really, I mean,
Yeah.
what Satoshi came up with and what Bitcoin is today versus what it was when it started out it's mind bending. You know, every day I learn more about Bitcoin after 6 years, and I'm still like, my mind is blown by it. It's insane.
And that's in a way why I've almost stopped doing too much learning on it, because I know that like it'll just distract me from all the other things I got to do, because it's probably a lifelong sort of thing. So I tether myself to guys like you and sort of, you know, I'm a little bit of a derivative thinker on this stuff, but that's okay. Like I've got other things going on, and as long as we're involved in wherever we are in building something that can be state resistant, resistant to bad actors, just bettering the world, because we're in a precarious place. And as I say, like there are certain scenarios where this gets not pretty.
Yeah,
you know,
absolutely.
Inflation, scarcity, war, revolution. Maybe that's all just not going to happen, and we're going to like sail through this all right. Hope so. But there's some ugly potential paths there. And I mean, the world right now is not the prettiest place.
No.
Right? There's ugliness, there's hatred, there's division. So with that backdrop, you know, we really need to be building in our sphere. And you guys are kind of in the crypto payment space, I guess, and doing various things that you do.
No, but with all those things, I just say thank God for Bitcoin.
Yeah.
Anything that's keeping me going.
Yeah. And so we got to just be building. And I think the monetary dimension to this is really, you know, because money is one half of every trade that gets done. The money is critical because it plugs into all the other stuff that's getting built. You spoke about the civil society organizations. You know, there's groups in South Africa and abroad that are trying to build parallel institutions. You know, not because they like want to be all sneaky and nefarious, because state institutions are failing. You know,
rapidly.
It's like if those things were hunky dory, this stuff wouldn't exist.
Wouldn't be a need for it.
But when you've got municipalities literally shutting down because there's no water, there's no nothing, you have to build alternative stuff.
What else are you gonna do? You're gonna lie over and roll over and die. You've got to build.
So, but as you build that stuff, there's a transaction economy there, right? You got to get supplies. You got to pay supplies. You got to transact. You got to sell water. You got to do all these things, and then you're going to get state actors coming in and trying to say, no, you can't do that. So the money becomes absolutely key in this whole
100%.
thing.
100%. On that bombshell.
Cool, guys.
This has been great. Thank you.
Yeah, man, listen, that was super fun, and really appreciate you guys indulging a sort of know nothing on that.
I think you should give yourself a bit more credit. Russ, where can our viewers and listeners find you if they want to track you down and read more of your work?
Look, I don't particularly need to be found, to be honest. But I don't do a lot of writing anymore these days. So I would say, boringly for now, just Twitter. Occasionally I'll throw out a few things on Twitter, which is at Russ Lamberti.
Where can they find your book, the book on Zimbabwe?
So the Zim book is called When Money Destroys Nations. It's on Amazon. You can order the physical book off Amazon or the ebook. We don't have an audio book yet. Suggestions? Do we have
read it?
So do we have a South African reading the audiobook because it was written here?
There was Zimbabwean reading the audiobook.
Or will foreigners kind of hate the local accent? So do we should we get halfway and get like a British reader? Anyway, we'll think about that.
Look, like I was saying to you earlier, I've read it and I was absolutely fascinated. It's an incredible book. So
well, thanks, man. And it's a very easy read. I mean, like you can probably read through it in a week or less. I mean, if you had to really sit down and go for it, you'd read it in a day or two. Very easy book to read. We wrote it about 6 years ago, and I mean, we're doing more sales now on the book than we've ever done. Not that, don't get me wrong, we're not making lots of money off. You don't make money off a book, but I'm just glad that people are buying it, and I think that they're buying it because money's being printed. And the book is about money printing. And whilst as I said earlier in this interview, whilst we've got to be very careful how we assess hyperinflation risk and sort of not just always cry the hyperinflation wolf all the time. there are principles that you see playing out. So yes, Zimbabwe is on the far end of the spectrum, but as you move towards that spectrum, you see the same sort of stuff starting to play out, right? The overconsumption, the breakdown of institutional order, the breakdown of institutional trust, social cohesion starts to struggle. We're seeing this in spades in America and in the rest of the world. So there's a lot of lessons there. So When Money Destroys Nations on Amazon, check it out. Very easy read.
And then for institutional clients who'd like to reach out to you for your professional services?
Yeah, so my business is ETM Macro Advisors. That's etmmacro.com. And we take a very independent view of macroeconomic issues. Just so detached from kind of the mainstream thinking. Don't get bogged down in kind of the orthodoxy and the sort of the popular opinion on the sell side research stuff. So the buy side clients that use us really like that, because it's just no holds barred, just reality. Because if I'm bad, I just lose my business, right? If I talk rubbish to clients, they're just going to drop me. So
you don't have a New York Times article you can just keep writing, spouting bullshit.
I don't have that. And a lot of there's good economists there's some good economists in the banks and so on, but like by and large they are protected. They've got sheltered sort of employment. I just have to say what's real, and my clients like that. I'm niche, and I can be very honest with them. So I produce some research, but also visit the guys, give presentations, lay out the macro landscape, what are asset allocation signals telling us, and so on. So etmmacro.com, the guys can check it out there.
Brilliant.
Well,
cool.
Thanks.
Russ, thank you so much for your time.
Thank you.
Brandon,
guys.
thank you as always.
Thanks, Brandon.
Thank you.
Much appreciated.
Cheers, guys.